Welcome to The Explainer. If you're in the mortgage world, you've heard the letters HMDA a million times. But what exactly is the Home Mortgage Disclosure Act? Today, we're going to tear it down, piece by piece, so you know exactly what it is, why it's so important, and how you can nail it, both in your daily work and on your exams. Okay, here's how we're going to tackle this. First, we'll get into why HMDA even exists, what I call the sunlight law. Then we'll cover who has to report and what they're reporting. We'll look at the law, which is where we see the data in action. Then, the scary part. What happens when you get it wrong? And finally, we'll boil it all down to the key stuff you need to know. Let's dive in.
All right, first up, HMDA, the sunlight law. You know, this whole thing really starts with a question that probably makes some of your borrowers squirm a little bit.
Yeah, this is the one, right? Why in the world does my lender need to know my race and ethnicity on a loan application? You get this question constantly, and believe it or not, the answer is all about a law that was designed to drag lending practices out of the dark and into the bright, clear light of day.
And that law is the Home Mortgage Disclosure Act, or HMDA. Think of it exactly like this. It's a sunlight law. Its whole purpose is to force financial institutions to collect and then publicly share a whole bunch of data about the loans they're making. Why? So that everyone, regulators, community groups, you, me, can see if lenders are actually meeting the housing needs of their communities. And more importantly, it helps us spot patterns that might look, well, discriminatory.
Now here's a super important point to get right. HMDA doesn't actually tell a bank who to lend to or who to deny. It's not a quota system. Instead, it just says, hey, you have to record what you're doing. It creates this absolutely massive public database. And with that data, anyone can go in and analyze what's happening. It's all about transparency.
Okay, so we've got the why down. Now let's get into the nitty-gritty. Who actually has to do all this reporting, and what exactly are they collecting?
First off, not every single lender out there is on the hook for HMDA reporting. It's not a blanket rule. You only have to report if your institution meets certain criteria. We're talking about things like your asset size, whether you're located in a major metro area, and this is a big one, your loan volume. You have to be originating a certain number of specific types of loans to trigger the requirement. And it's not just about who the lender is, it's also about what kind of loan it is. So, for example, your standard home purchase loan, a refi, or a home improvement loan, yeah, those are almost always reportable. But you get into some odd situations, like say a bank is acting as a trustee for an estate and originates a loan in that capacity. That's a different story. That one's not reportable. So the details really matter here. So what kind of data are we talking about? Well, it's a lot. They need to collect applicant info, that's the ethnicity, race, sex, and income stuff we talked about. They need all the details about the loan itself, the amount, the purpose, the pricing. They need information about the property. And then there's this really important piece called the Unique Loan Identifier, or ULI. It's basically like a serial number for the loan so it can be tracked without revealing anyone's personal identity. Okay, so you've collected all this info. Now what? Where does it all go? Well, it all gets compiled into one super important master file. This document is called the Loan/Application Register, or the LAR for short. The best way to think about the LAR is like the lender's official HMDA diary for the entire year. And I mean, everything goes in there. Every single application that's reportable gets an entry. It doesn't matter if it was approved, denied, or even if the applicant just walked away and withdrew it. If it's a reportable app, it's got to be on the LAR. The whole life cycle of this data is pretty logical, but you've got to be meticulous. It starts with you, at the application, collecting the data. From there, it gets compiled onto that LAR we just talked about. Then, the institution submits that LAR to the regulators, like the CFPB. And the final step, a modified version of that data, with all the personal stuff stripped out to protect privacy, is released to the public for anyone to see. Now, as you can probably guess, when you've got this much data flying around and it's all public, getting it right is a really big deal. Accuracy is everything, because the consequences for messing up can be pretty severe.
Now, the law isn't totally heartless. Regulation C, which is the rulebook for HMDA, does acknowledge that, hey, people make mistakes. But, and this is a huge but, you can only claim it was a bona fide error if you can prove it was unintentional and that you have procedures in place that are specifically designed to catch and prevent those kinds of errors. You can't just be sloppy and say, oops.
And this is really the bottom line, folks. Inaccurate HMDA data is like waving a giant red flag at regulators. It screams, hey, look over here, something might be wrong. It can trigger fair lending exams, intense scrutiny, and full-blown enforcement actions. Trust me, the pain of getting the data right up front is nothing compared to the nightmare of an investigation later.
All right, let's bring it all home. What are the absolute must-know points for you, the mortgage pro, to take away from all this for your job and, of course, for that exam?
Okay, exam time. You are almost guaranteed to see a question that looks something like this on your SAFE exam. I'll give you a second to read it over. What do you think? A, B, or C?
If you picked B, you are absolutely correct. That's the core purpose. So let's lock this in. If you remember nothing else, remember these 4 things. 1. HMDA is all about transparency. It's about shining a light. 2. The LAR is the main tool you use for reporting. 3. All this data is collected to spot potential discrimination. And 4. Accuracy is your best friend. It's what keeps you out of trouble. Get those 4 points down and you're in great shape. So that leaves us with a final, pretty big question. Is transparency the same thing as fairness? And the truth is, no. HMDA gives us the data. It gives us the tools to ask the really hard questions about whether lending is fair. But it doesn't give us the answers. It's a starting point for accountability. And how effective it is? Well, that really depends on how it's used by regulators, by community groups, and yeah, by dedicated professionals just like you.